The Daily Finance Wrap. A very good evening to all those who've tuned into this live broadcast. This is your daily dose of personal finance updates covering investments, insurance, loans, real estate, everything to do about your money. And of course, we get the experts to do the analysis. We'll also take viewers' questions and queries. So please keep them commenting on our live stream and send us your questions on this YouTube feed, and we try and get our experts to answer them. I'm your host, Stacey Pereira, and on today's show, we're going to be discussing something quite interesting. Whether we as Indians can be sitting right here and still trade and invest in overseas stock markets, especially when you have so much buzz around the Amazons, Apples, Facebook, Googles, and you would want those, and they've been seeing some phenomenal returns when it comes to how those stocks have been performing, and you would definitely want to see that in your portfolio too. Now, these are, of course, brands that you and me or any Indian uses on a daily basis too, and which is why we would want to see, be a part of this growth story perhaps. So in today's show, we're going to be understanding how to go about trading and investing in overseas markets. But before we get into those details, let me take you through all the top headlines for the day. Now, we did see the Indian equity markets close on a positive note today, with the Nifty 50 finishing above that 24,250 levels, the Sensex too adding about 445 odd points. We did see the biggest gainers in Ultratech Cement, Apollo Hospitals, Grasim Industries, as well as JSW Steel and Shriram Finance among the Nifty 50. Whereas on the flip side, the laggards were there in HDFC Life, Cipla, NTPC, SBI Life Insurance, as well as L&T among the laggards. Overall, on the sectoral basis, we did see all sectoral indices, in fact, ending higher in the green, with realty, pharma, metals, auto, and the likes all rising by about 1% each. So that was in the markets. You did see Cipla take a little bit of a knock due to that block deal that transpired today, about 1.7 odd percent of equity that changed hands in today's session. But another stock that will be in focus, and that has to do with Wipro. That's because Wipro will go ex-bonus tomorrow, and this is the first time the company has set this date as the record date for its bonus share issue. Wipro will be announcing a 1:1 bonus issue along with, this is what they announced in their September quarter earnings. This also means that nearly 2.2 million small shareholders of Wipro will be receiving that one bonus share for every share that they have or they hold as of the record date. Shareholders who hold Wipro shares will be eligible for this bonus share, of course. And this, remember, is the first time that Wipro is issuing bonus shares since 2019. So after that long hiatus, they are coming back with a bonus issue, and this issue is, Wipro is among the few companies that has issued that many bonus shares among the Nifty 50 or even non-Nifty 50 companies. A total of 13 bonus issues from its history of being a listed company. So another boost for the shareholders of Wipro, at least come tomorrow, they will be getting those bonus shares. Moving on then to something that might impact you and me, of course, in the long run, perhaps. That's because the Finance Ministry has gone on to announce the removal of windfall tax on aviation turbine fuel, or ATF, also on crude oil products like diesel and petrol. Now, how will this go on to impact us? That's because if the airlines do choose to give us this, how much they've been paying on ATF, there could be some sort of relief, but it would take time to trickle down. Now, the government had issued two notifications on the immediate withdrawal of the special additional excise duty that is placed on crude oil production, as well as the export of ATF and SAED, and the road infra cess that is put upon these, especially for the export of petrol and diesel. Now, these notifications will also be presented in Parliament now that the session will go on. And you do have, remember, the windfall tax was introduced back in July of 2022. And it did have that special levy on domestic crude oil production, because there was that surge that we saw in global crude oil prices. Among the crude oil tax, the government had also imposed that special taxes on the export of diesel, petrol, and ATF, and which is now they are going ahead and scrapping. Also to do with some personal finance here. Now there is a relief coming in from the government once again, and this has to do with your ITR filing, because the Central Board of Direct Tax has announced a 15-day extension for taxpayers. Now this is to do with people who have to pay international or specified domestic transactions, who need to file their reports under Section 92E of the Income Tax Act. Now, the deadline for filing the income tax returns for these taxpayers was pushed from the original date of 30th November and now to 15th of December 2024 for the financial year of 23-24. These reports, of course, provide the detailed documentation of any international transactions in order to ensure that compliance with transfer pricing rules. The total value of any such transaction, especially if they are to do with international transactions, must not exceed 20 crore rupees for the extension in order for you to apply. So that had to do with the ITR filing. And since we're talking about international transactions, like I mentioned, today's whole episode is to do with whether we can trade in international stocks. So how does one get started if they are interested in looking at global markets and not just the Indian markets? We've been seeing some bit of turmoil in our markets and some corrections. So does it mean that we could now diversify and look at other stocks? And especially when we talk about the Apples, Tesla, Netflix, these are things that, like I said, we also consume, and so you would also want to be a part of their growth story. And they, of course, have been showing some phenomenal returns, at least if you have to look at the stock performance alone. But is it that easy to diversify your portfolio and look at global stocks? Well, in the next 20 minutes, we'll try and understand how one can invest in these markets overseas. Does it mean you need to have a separate kind of demat account? Does it mean there are some kind of caps and limitations? And of course, what are the tax implications? That is something very important that we need to be taking note of. So we'll try to get that answered for you. And joining me to help you with all of that is our guest today. Joining me is Raghvendra Nath. He's the managing director at LadderUp Wealth Management. Thank you so much for speaking with us, Raghvendra, and giving us your time.
Thank you, Stacy.
Let's just first up, look at directly. I'm sitting here, I'm looking today. People are talking about, oh wow, Google and Tesla are seeing some great returns for their investors. With my Indian demat account here, is it possible for me to be investing in US stocks, or do I need to have a separate overseas trading account? And how does one go about getting this? What are just the basic that I need to have with me if I'm looking at these stocks and I think that, I want to also trade in these international stocks?
Yeah, so I think this is a question that many people have in their mind, because, as you rightly said, a lot of us have been consuming content from all these famous companies for years, and we own an iPhone, and we basically go on Facebook, and we Google on we browse through Google, and we watch Netflix, and these companies have done phenomenally well. And not only these, there are scores of businesses out there in the international markets, in areas where there's not a single Indian company. For instance, artificial intelligence, everybody is talking about it, but there's no company in India where you can invest in. So obviously, diversifying internationally is a great idea. But your Indian demat account is not going to be of any use there, because the Indian exchanges only deal with Indian companies. So if you want to own these businesses, then you need to basically open a trading account with an international broker. Okay, and which means basically, kind of, obviously it could be online brokers like Interactive and Sexo, or basically sending money outside India, and then opening up an account with some of the more famous brokers like Charles Schwab and all that. But it's possible to open broking accounts outside, and which basically means that you have to send foreign currency and then start these broking accounts.
Right. So is there some kind of restrictions or, the cap that is laid down by the government? What is that? What does the law in India say about investing overseas? Like you said, I need to have an overseas account or with a brokerage that doesn't function in India. But is there also an amount to how much I can be transacting, and is there a limit that has been put by the government?
So since we have partial convertibility, there is a restriction on the amount of money that you can send outside. Right now, that limit by RBI is set at $250,000. So if you take a roughly 83, 84 rupees, it is almost like 2.1 crore per person. So let's say a family of four can actually send $1 million every single year. So every financial year you can send 250,000 per person. So husband and wife put together 500,000 can be transferred outside India and can be invested in places that you deem fit.
Right. So that is about, what are the limit, what is allowed for somebody sitting here in India and they are looking to be investing overseas. But also, what are the kind of assets that you can be looking at now? I did speak about stocks and having them, but does it mean directly investing in these stocks, or can we have an indirect investment route via
Yeah.
mutual funds or ETFs? And is that easier to trade, and also because it limits those risks, you would say? Or how does investing overseas, does it make sense to do it via these instruments, or you can just look at doing it directly as well?
True. So I think very very pertinent question, Stacy, because when and you use this word trade in your statement, and when you are trading and when you are investing, these are two very different things. Okay, and international markets can be brutal when it comes to volatility. Okay, I remember a few years back, Facebook did not grow the numbers of subscribers in a quarter. So there was no fall in numbers. The subscriber base did not grow, and on that day, Facebook fell by 24%. Okay, and so these instances keep happening, and we because when we are sitting very far away, and these corporations are really really large, and they have multiple operations, understanding the annual reports itself will be a task. So
Right.
we'll be investing in these with very very limited information about them. It's more of fascination
Hmm.
than inclination to invest. And therefore a passive route may be far better than investing and dabbling into these stocks directly. Okay, and there are so many ETF globally has become a very very large concept. Exchange traded funds are the preferred way of investing. And of course, if somebody wants to maybe invest more money and for longer term, they can also look at actively managed funds. So, for
Right.
instance, Franklin has a mutual fund in India. Franklin has a very large fund house in United States. Similarly, Capital International, Vanguard. There are so many large mutual funds, and they are active managers of money, and they've been there for decades. 50, 60, 100 years, and therefore you can actually invest either through them or through ETFs, and all that is possible when you open a broking account. So broking account is not only just meant for buying stocks. You can buy bonds, you can buy ETFs, you can buy mutual funds.
Right. In fact, just help somebody understand. You just mentioned a couple of these fund names like Franklin or Vanguard. How does one go about, getting an account there? Are there certain costs involved even to that? And if you have to just take us through, if I want to now start opening an account with a Franklin, how do I go about it?
So basically, you need to first go to a broker. So let's say the Charles Schwab is a very large broker. Ameritrade is another large broker, and these are all very international. They have been they are multi-billion corporations. Okay,
Hmm.
there's a broker called Interactive, which is basically completely online. So you can actually open an Interactive account sitting in India, and do all the paperwork, and then you transfer the money to them. Now the difference that people need to realize is that when you buy a share in India, it's transferred to your demat account, which is basically which is so broker acts as a depository participant, but the custody is with CDSL or NSDL, these two depositories which have been created by the government of India. Okay.
Right.
Internationally, there is no such concept. So
Okay.
when you buy a share, that share lies with your broker, okay, in the broker's account. It's obviously
Understood.
marked to your name, but it's lying with the broker, and therefore people need to keep that in mind when they're investing internationally. Obviously there are custodial services which
Hmm.
many banks provide. So, like Citibank is one of the largest custodial services internationally, for instance.
Right.
And there are so many others. Every bank, whether it's Barclays or Citi and Standard Chartered, everybody offers custodial. HSBC, all these banks which are multinational, they offer custodial services. So you can, if you are dealing through those banks, then you will be able to buy shares and then also take custody services. So custody, they'll charge you some money for custody,
Yeah.
depending on the quantum, and then you basically pay some small transaction cost for the shares that you are buying. And then but you can, if you are a small investor and you are maybe thinking about 5, 10, $20,000,
Hmm.
obviously these banks may not entertain you for such small amounts, because custody services are usually taken by private, when you're dealing with private banking, millions of
Right.
dollars. Okay. But for 10,000, 20,000, it's better to maybe open an interactive broker account, and then you start buying
Hmm.
ETFs and mutual funds there.
Right. So you do have two options. One is to the brokerage firms that are there, or you also have your international banks, or
Banks.
those options. But those, of course, are much. They will be charging you much more as well, and might not be for a smaller amount. Now, speaking of charges, of course, we know these. We are talking about international stocks. There is going to be different charges that will be involved. Also, the conversion rate. So just take our viewers through what exactly is going to cost somebody who wants to start investing overseas. What are the different things that they need to keep in mind that they will need to be shelling out for, not just the stock per se?
So markets have been very competitive. Okay, so like India, brokerage rates are not very high. You may pay $1 a transaction, something like what you are paying in India. So transaction charges are not much. And if you are not taking a custody account, in any case, those shares lie with the broker. So you buy
Hmm.
shares and then they are lie with us, then you sell, and then you can get your money back from the broker. Okay. And so if you're dealing with the only risk that you're running is if this broker tomorrow disappears, and the solution for that is to deal with some of the largest brokers in the world, and
Hmm.
some of the names that I already took. Besides that, when you are sending, obviously when you'll have to send foreign currency. So when you convert your rupees into dollars, there'll be an exchange rate, and there will be a service charge that the bank will apply. There's a TCS, tax collected at source, of 20%. So if you are sending, let's say, $1 lakh, 20,000 rupees will have to be given to the government, which can then get adjusted against your potential tax liability in future with it. So in India, let's say I have to pay 10 lakh rupees of taxes, and my TCS is 50,000. I can adjust this 50,000 against that 10 lakh liability. Okay. But
Right.
at the time of transfer of the money for an exchange, a TCS will be debited.
Hmm.
So these are some of the charges. And but other than that, I think it's pretty efficient actually.
Right. So pretty efficient, but one needs to keep in mind you'll have a transaction cost. You'll also have your currency conversion charges that either the brokerage or the banks that you're dealing with will have. You'll also have that account setup fee, perhaps, that you're going to need to park this money into different currency. So that is also going to charge you. And of course, like Raghvendra mentioned, the TCS, which is all of 20% for your remittances under the liberalized remittance scheme that the RBI provides, and that also has a cap for it. So you're going to be charged 20% on that amount as well. So those are things you need to keep in mind. But charges aside, there are also tax implications for people investing and trading in overseas markets. One might not realize it. Like I said, you have your TCS and all, which is applicable here in India, but there would also be some kind of rules and liabilities, because this has to do with international or an overseas country, are there some kind of liabilities that you need to also be paying in whichever country you're dealing with? And what are the tax implications even back here at home?
So, no, very good question, Stacy. So, first of all, the good news is that last year, in the current budget, this year, when the new government was formed, and in the month of July they came out with the budget, they harmonized the tax structure. Okay, so when it like basically equity used to be charged 10%, now it's charged at 12.5%, and all international assets they had a structure of 20% with indexation earlier, and now it's also reduced to 12.5%. So that's good news, so you are paying the same level of taxes on capital gains that you are paying in India versus what you are paying outside India, so it's the same thing now. Okay, so that's a positive development. And however, every country, so let's say when we are investing in US, US has a tax deducted at source when it gives out dividends. So let's say if you've invested into mutual fund, ideally you should basically look at growth, options which doesn't give dividend, because on dividend there'll be a TDS applied, and but because we have these DTA, double tax avoidance agreement, between most of the countries, large countries, which could where you an investor could be potentially investing, any TDS which is deducted there can be adjusted against the taxes that you are potentially going to pay in India. Okay.
Hmm. So
But
you
most of the countries don't have any TDS on capital gains or
okay? So there's
withholding.
no right. There's no TDS on your capital gains. Now it's kind of got formalized to at least the long-term capital gains to about 12.5% if it is held for more than 2 years, and be that even foreign stocks, you're going to have to pay that tax here in India. And you also did mention something about the double taxation avoidance agreements that different India has with different countries. So one will have to also do some bit of research on that, or will the brokerage then kind of also keep all of that in mind, and then they are looking into all of these details, or will a person have to do that little bit of due diligence and check into
Uh,
all of these aspects?
yeah. So, see, brokerages and most of these brokerages that you are going to sign up will be online, okay, because you are a retail investor. So, the withholding tax certificate, for instance, it is something which is a little difficult to obtain, because the underlying company has charged that withholding tax. It's basically given that to the broker. Broker may be holding hundreds of thousands of shares of that company, and the withholding tax certificate will be one. So that's a little complicated. So in most cases, when you're dealing as a retail investor, you are not going to get the benefit of withholding tax in India. That's the practical aspect of it.
Right, right. So you do not, I mean, you shouldn't be factoring that in the first place. Also, if you
Yeah.
could just, Raghvendra, list out for us typically the risks involved. If, I have talking about all of this and you're seeing these good returns, which all seem hunky dory, but also there is a flip side to the risks that would come with deciding to invest overseas. And if you could just, list those out so that people have that at least at the back of their mind when they're thinking of doing something like this.
So obviously, the first risk is risk of custody. Okay, and as I said earlier, in India we have this beautiful system where you buy even one share of, let's say, a company. That share is kept under in a depository. So every Indian has the right to basically depository, which is not the case outside India. Okay, so only the rich people can get custodial services. Retail investors have to contend with the brokers, and then keeping those shares with the brokers. So you are running a broker level risk. If the broker goes down, there is a chance that you may not get full money or partial money and all that. So you have to contend with that risk. The second risk that you have is volatility, currency volatility, because you're investing in dollars, you're converting your rupees into dollars. And therefore, if rupee were to appreciate, let's say today rupee is trading at 84 and it became 75, when you convert your dollars back, you will get much lesser rupees. So there'll be a currency loss to you. So obviously the flip side is if rupee depreciates, then you also gain extra. Okay. So that's the second. The third is that I told you about is volatility, because it's a no holds barred volatility. So if you're investing in individual stocks, you're going to be exposed to that volatility. Okay. And third is basically lack of information, because you are going to invest in these stocks or companies with very little information. You know,
Hmm.
whatever you are reading on the internet, and that is also patchy. So you are going to invest based on very limited information, and that's why at least the last two parts, basically volatility in the markets, individual stock volatility, as well as lack of information, can be avoided by investing into ETFs and mutual funds, because then you are buying a portfolio, and a
Right.
manager basically who's fully equipped, skilled, and experienced is actually taking care of those
Looking into
decisions.
this. Right. Okay. Suppose I was to assume that I want to go ahead and buy Meta platform, so Facebook, and that one trades. Just to give an example, it trades somewhere around $575 or so on the Nasdaq. Now, given the conversion rates and all of it, it's going to become quite expensive for a retail investor sitting here back home. Are there options of buying fractional shares? And I know US specifically does have them. How does one go about that, and how much? Does it make it easier for a person like me, having to own the likes of a Meta platform then?
So you can buy fractional shares, but idea is that, let's say you want to buy Meta, okay, you may also want to buy Netflix in that case, or you may want to buy Twitter, or so there are ETFs which could be a few stocks ETFs, single stock ETFs. You could be, you could have thematic ETFs. So rather than investing in a single stock, it's better to go through those ETFs, because then you can, instead of investing $100, $200, will in any case will not be meaningful.
Yeah.
Start investing some it through, let's say, $500 a month or $1,000 a month, so that you can at least start building a portfolio which is meaningful in nature.
Right. So the ETFs would be a better option instead of going just for fractional shares, because then over time you're going to get the returns of a whole bunch if you look at the thematic
Yeah.
ETF. So even if you're looking at the S&P 500, that has most of these big names in them. Also, I think in India we did start an option for one to buy US stocks via the NSE IFSC exchange. Now, this is in the gift city that was started. It was initially started to have more NRIs and foreigners invest here, but that also gave us one option of Indians looking at a couple of stocks. If you could tell us something more on what this whole process was of investing to the NSE IFSC, and how does one go about doing so?
So first of all, so government is seriously trying to make this IFSC a globally well accepted one. Okay, and so it because they are saying they are think they are aspiring that this becomes a global trading hub. Like Dubai, like Hong Kong, like Singapore. Okay, and obviously it's going to take a lot of effort and a lot of time before that happens, because international investors should congregate there and start doing transactions regularly. So right now it's like a one-way street. Most of the money is coming from outside to India, and that is also limited. And whatever money is going from here to outside is in very limited banking transactions and all that. Then there are limits, basically. So they've been till now in IFSC, there's limit of, I think, almost like $120,000 or something, which is the minimum limit for which you can basically invest. Now the
Right.
government, the IFSC, basically regulator, is proposing to lower it to $10,000. And
Okay.
for that also could be much higher for some people. So it's better if you're thinking internationally and thinking incrementally, let's say in increments of $500,000, $2,000, then probably going through a broking account or some platforms. There are a lot of platforms like ICICI, I believe, have
Yeah.
created a platform through which you can buy international stocks and ETFs. There are certain apps in India, I can't recollect the name, but they are also offering the same similar platforms. I talked to you about interactive brokers. They have
Right.
set up an office in India, so you join that platform and then start investing incrementally. That could be a better way of doing things than going through IFSC.
Right. I believe also the IFSC has only a few limited stocks at this point, and they're looking to increase it. And also the fact that you're only going to get depository receipts, only DRs and not
Only
shares per se. That's also
and plus
another problem.
liquidity will be an issue, and therefore there'll be premium or discount to the trading price, so there'll be multiple factors.
Right. Well, it was really a pleasure talking with you, Raghvendra. But I'll just ask you to sum up as a whole. If somebody is looking to invest overseas, what all do they need to have in mind, and what all, you did mention the risks. You did mention how you need to go about it with looking at different brokerages. If you could just summarize that, and also tell people how easy or difficult it should be, and how they can take the step forward.
So, Stacy, I think international investing is a great idea. First of all, most of us we think India is the be all and end all, but India is very one small market in the global arena actually, and there are so many opportunities. Like robotics, there is not a single company that I can think of which is specializing in robotics and which is listed in India, or artificial intelligence, or biotechnology, or semiconductors. They are there, or cyber security. I can keep on naming themes, and you will find that there is hardly any companies which are gaming. For instance, electronic gaming is such a huge business, worldwide, and India has not a single company which is listed. So if you were to basically want to participate in these themes which are futuristic, this is where the money is going to be made, in over next 10, 20 years. So international diversification is the only way. And plus you also need to guard against any volatility which is a single market exposes to you. So by investing in multiple markets, you diversify. So it's a good way. And while it seems very difficult, once you start doing it, you will realize that it's not so complicated. And I think the key thing will be to keep things simple, because it's very easy to go wrong. So keep things simple when you start, and as you gain experience, you can start diversifying more and more.
Absolutely. So there is a new avenue that you could be looking at, and like Raghvendra Nath helped us there to understand how it is or what all you need to get into while investing in foreign markets. It allows you to diversify your portfolio. Of course, it also will give you that idea of how to go about navigating that volatility, especially, but also you need to have all that information at your fingertips. You need to be research and analyzing on these stocks before you get into all of those details. So definitely, international stock investing has its pros and cons, and one needs to actually read the finer details or take help if you want to invest into these aspects. But you can definitely go ahead and look at the different options that are available there, whether it is direct investments or even through mutual funds and ETFs. There are those options, so we don't need to limit ourselves just to the Indian markets. Let me thank Raghvendra Nath, there, the MD at LadderUp Wealth Management, once again for giving us his time and speaking with us. Thank you so much, sir.
Thank you, Stacy. It was a pleasure being here.
Right. With that, it's a wrap on this edition of the Daily Finance Wrap. Many thanks for all of you who've tuned in. Stay tuned for more such interesting interviews and updates on the Personal Finance TV.